Hello everyone, this is Marshall Gittler, Head of Investment Research here at FX Primus, bringing you the Week in Focus for the week beginning May 1st. Now, after last week's flurry of central bank meetings, this week we have a flurry of vacations. Monday is Labor Day in China and a holiday in the UK, as well as some other places. And this week as a whole is Golden Week in Japan, meaning Tuesday, Wednesday, and Thursday are holidays there. Thursday is also a holiday in much of continental Europe, including France, Germany, and Switzerland. For traders, the highlights of the week will be the Reserve Bank of Australia, RBA, meeting on Tuesday, and the U.S. non-farm payrolls on Friday. For Australia, the odds of a rate cut increased dramatically last week when it was announced that prices had unexpectedly fallen in the first quarter from the previous quarter. Now, this was the first instance of deflation in 7 years. Now, the RBA regularly says that low inflation would provide, quote, scope for further easing, quote, should that be appropriate to lend support to demand, unquote. Now, the market wasn't expecting a rate cut before, but after the Q1 inflation data, it now sees about a 50-50 chance that they'll decide at this meeting that it is appropriate. Whether they do or not, though, I expect the Australian dollar to ease from these levels for two reasons. First off, this is a somewhat crowded trade. Speculators have been net long the Australian dollar since the middle of February, when iron ore prices started to recover. These positions have been well rewarded, as Aussie was the second best performing currency in the G10 after the Canadian dollar. Maybe it's time to take profits there. Secondly, I expect iron ore prices to start falling, and fast. Prices of all commodities have been boosted by unprecedented speculation in Chinese commodity futures markets recently. More futures on iron ore are traded daily in China than is actually produced every year. That frenetic activity is starting to cool now, though, as the commodity markets take steps to dampen turnover. And once people start losing money, they'll start losing interest fast. In short, I expect that even if the RBA doesn't move, I think people are likely to continue to take their money out of the Aussie and put it elsewhere, weakening the currency. As for the NFP, the figure is expected to confirm the Fed's confidence in the labor market and so should prove positive for the dollar. The FOMC said last week that, quote, labor market conditions have improved further even as growth in economic activity appears to have slowed, unquote. Now, if the number comes in as expected, around 200,000, which is about the average recently, then it could prod the market to reassess its dovish view on the FOMC statement. That would be a positive for the dollar. Speaking of the FOMC meeting, several of the regional Fed presidents are scheduled to talk this week. They ought to give us more insight into last week's deliberations. Other points of interest during the week are the final PMIs for April, including both the official and Caixin versions for China, and the US ISM index on Monday. Swiss FX reserves on Friday should give us some indication of the scope of their intervention in the Forex market, if any. This is Marshall Gittler, Head of Investment Research at FX Primus. Get more market insights on our education pages and turn your trading ideas into action with FX Primus, the safest place to trade.